Good morning. Welcome to Pries Capital. You must be the new recruit.
Oh, is this the new recruit?
Yes, it is.
Awesome. Follow me, Mr. Superstar. Here at Pries Capital, we love showcasing art. The stunning bronze dragon sculpture, Pico, by the renowned artist Nano Lopez, is definitely a showstopper. And these pieces on the walls, the legendary Michael Godard is practically a rock star in the art world. There's art all over the office, creating a vibrant, creative atmosphere to work in and collaborate in. And here is Tyler Pries, our hardworking mortgage loan officer. If you're looking to purchase real estate in the Myrtle Beach area, Tyler's the guy to know.
Looks like I have your hands full. Ashlyn, can you grab a book for him? And I'll see you at the meeting.
And here's Raj, one of Jason's right-hand guys for commodities trading. Good morning, Raj.
Good morning.
Meet the new recruit.
Hi. Hope you like to work hard and play hard. This is a high-stakes environment. Split-second decisions can make or break an opportunity. Welcome to the firm.
Don't worry about Raj. He's a quiet powerhouse, but he's critical to everything we do here. And here's the founder and real estate powerhouse herself, Tina Price.
Good morning. How are you? So glad to have you with us. Can't wait to see you in action. We're just about ready to start the meeting for Jason's market analysis. I will see you both in the conference room.
Good morning, Jason. This is the new recruit.
Hey, welcome. We're glad to have you here. Your skill set is exactly what we need. I love people dedicated to their craft. But hey, I got to get ready for this morning's analysis, so I'll see you in a bit.
Thanks, Jason. You're awesome. Right here, we have one of our many conference rooms. And down the hallway over here, we have the intelligent and sharp-eyed Miss Jill.
Why, thank you, Ashlyn. Nice to meet you.
Jill thrives in the world of spreadsheets, balance sheets, and financial forecasts.
You'll fit right in, so go check out your new office.
And here's your new office. And over here, we have some welcome goodies for you. Just a small thank you of saying welcome to the family. Okay, so I've got to get ready for the meeting, but check out the gym over here, grab some coffee and bagels in this room to the right, and then I'll meet you in the conference room.
Good morning. Thanks for joining us. Go ahead, take a seat. Welcome back to another morning market analysis. Let's get comfortable and dive in.
Over the weekend, the market got hit with a fresh wave of trade war headline risk, and price responded the way it usually does when uncertainty spikes, fast, emotional, and one-directional. Whether the details evolve, or get walked back later, what matters to us is that day trading is simple. The tape just printed a large gap down, and that changes the playbook immediately. Good morning. Welcome back to another Team Day Trader edition of the daily market analysis. Settle in, grab your coffee, and let's prepare for today's trading session. As always, if you're new, take a moment to subscribe and hit the and check out the resources in the description listed below. How's everybody doing this morning? How's the great long weekend? Right, yesterday, even though the markets were closed, I did do a little bit of ES trading on that gap down in the overnight or over weekend, and then here we're sitting today, and I get to talk to you guys. So I do got a couple things to talk about. There's not much on the news. You know, I kind of just always keep this up because this is the, you know, kind of the screen that we kind of always start with on every day. But today, right, you know, because of yesterday's holiday and because this isn't such a new gap, right, we gapped on Sunday, right? So I'm sure anybody who's a trader, right, recognized this going into today. So I don't think we have to talk too much on the tariffs and geopolitics. Everybody knows everything. I think, you know, we can kind of skip this and go right into other things. The other thing we usually talk about is the probabilities on the Fed Watch tool. This is just something I systematically do. So I share you guys my habits. And so again, nothing changed, even though we had these tariffs or, you know, tariff news with Trump and the EU, this hasn't really changed. I'm not going to take too much into this 2027. That's way out into the future. But, we're still talking about, one rate coming in June into the summer, spring, summer, and then another second rate cut into the fall, winter. This keeps on oscillating. Right here, you can see like 32.4, 32.3. So whether it's October or December, another cut. Again, I don't take too much into this. If anybody's ever back test, the Fed watch tool, which I'm sure some of you guys are smart enough to do, but this is this has the high probability of not being accurate. The reason why I do just keep an eye on this and monitor it every day is just to see how market participants, are kind of changing their perception of what the Fed's going to do. And so that just gives me a little bit of the insight. But, I wouldn't, again, my 2 cents, whether it's worth anything, right? 2 pennies is I wouldn't be surprised as the year goes on that we only get one cut. So, right, last words of where I eat my words, but I'm under that impression going into this year. I'm under the impression that labor is going to stay decent, but we're going to have somewhat of some inflation. And I think that's going to keep the Fed on pause. And again, as I talked about before, where you're getting interest rates, right, the higher for longer. And again, just as I'm talking, which we'll look at the chart, but we'll look at the interest rate chart. I'm just going to delete this because we can get it right into that. But we'll look at the 10-year because that's moving right now, as well as, we'll talk a little bit about gold. I got a ticker, a stock pick. It's really not really a stock, but I do got something that I am looking at that as a new trade putting on this week, and I'm really watching it, and that might even be today as an opportunity. So I'll share with you guys my thoughts on that. Dollar's fallen, and yeah, the biggest thing I'm watching is the rates. So as of 7:20, which again, now it's good morning, Earl. Hey, by the way, shout out. Good morning, Henry. How's it going, man? First one here. Good morning, William. Good morning, Earl. And always in the chat, it's just a small group of us anyways. If you do want me to take a look at anything, just my 2 cents after we get through the ES, throw it in the chat, and I try to keep an eye on that. Danish pension fund to exit U.S. Treasuries. There you go. This world that we've been in, and I don't want to get too much on a rant fest, but this world that we've been in for 40 years, that in the recency of history, I think the 60-40 portfolio, the baby boomer kind of generation that they've seen and they've lived through their living life is going to be different in the next the next few generations. I think, we're just in a, totally different world, which, the way that you used to invest, I don't believe is going to be the same way, which is probably going to be hard for the baby boomer generation as we go forward. I think they're going to have a hard time kind of dealing with that if they live long enough. But also, I think their advice to their kids is also going to be detrimental because, I'm sure they're like, hey, this is how I've made money. And so if it works for me, it's going to work for you kind of situation. And when I look through history as a financial historian, I just think we're in new times. So I won't get too far on that rant. This is not what this is for. But I just want to throw those 2 cents in. as of 7:20 when I wrote the morning market analysis, right, is now 8:30, so an hour's gone by. We were roughly down 105 points. We're roughly down 110. I want to add these couple notes. Is it was interesting, when I came into the office this morning. I do the overnight skew. We talk about this every morning, and right, I wrote this in my analysis is I was expecting a little bit of a higher negative overnight volume skew, and to my surprise, it was only negative 1.88% net short. So right, that mismatch is a clue. We've got sellers control of price, but not in the kind of one-sided positioning that screams everyone is already fully committed. So again, I just want to point that out. We are opening out of balance with a large gap, so gap rules are in play, and then we do have a 10-day ATR of 55.25 points. Again, my base case today is right bearish but tactical. You guys know me, I can flip, but I am coming into this with a bearish but tactical kind of position, mindset. I'm looking for the big move down to transition into a working range. I do want to see a clean, which we are getting kind of this one pullback, which again we'll look on the charts, but we are getting this one pullback. I'm looking for a two-legged pullback into resistance and then a retest of the low, and that's how I'm seeing today's chart. Obviously, I'm going to open up with gap rules, right? Day trade setup 1, because gap rules are in play. But then again, I'm transitioning as the day unfolds, live trading, right? So as new information comes to you, as you're, think of it in a real game, whether you're playing football or basketball, right? There's, you come in with, coach comes in, this is the game plan. And then as things are working in live, right, you may have to pivot or transition, one way. But you got to come in with the game plan. I'm coming in with day trade setup number 1 off the top. I am then going to transition to day trade 12. And then I'll be watching for day trade type 15, right? As this becomes a premium opportunity, especially if it triggers from a failed push lower that snaps back hard, right? So that's kind of my thoughts. The levels to watch that I'm watching for is 68.97.25. We'll take a look at that and why that, why I believe these levels are important. And then again, if the buyers do get a push above that level, right, the must hold is the 69.24.25 is the must hold by the sellers. I mean, right, we're going to look at that and we're going to talk about profile structure and why this is important in not only today, but as we kind of work through this week. Today's kind of, I know yesterday was a holiday. Usually Mondays I don't, I'm not with you guys. It's like the first official trading day of the week. But I always think Tuesday is kind of, for me, the kickoff of the week. And so, when I think about that, this level here, 69.24.25 is definitely going to set somewhat of a tone how we trade today and that level. The reaction, I will be looking, if we do get above that 69.24, this reaction of 69.05 comes into play. But again, there's a lot of things that has to be, corrected, right? We got to kind of push through 68.97.25. Price would have to then push through 69.24. We'd have to hold a pullback, right? And then buyers would have to, kind of step in aggressively holding that pullback to get to 69.05. So I don't want to go too far, but, with the volatility, could kick up. And this reaction zone on an intraday signal and how we play around with that will definitely be interesting. As we close today, right, do we get a close above 69.32? That would be something meaningful as a repair and upside strength, while a continued acceptance below 68.50 50 becomes meaningful for more selling to come into the week. So with that said, let's get into the charts. I don't think we have to do too much on the day chart, weekly chart as of yet, right? Still early in the week, but I do want to go to, silver. We'll take a look at silver and maybe a little bit of gold. We'll take a look at that concerning how commodities are all up so much. Yeah, gas almost $4. Oh, natty gas. Yeah, natural gas. Yeah. I definitely, like I said, I've been last week, or when we were talking about CPI and I went through the commodities on the feed, that's my big play for 2026. Is the energy and the resources, whether it be agricultural and or metals and or gas, any of these, whether it be fuel, all these things in my eyes, I just believe that we are in more of an inflationary world than what we were, coming out of 1960s, 1970s, the wage pressure, we don't have China anymore with low wages, which really kind of, when you think of the global world, right? That just kind of, when we were able to transfer labor over to China cheaply, that was really a deflationary effect, even over here in the United States. That game is over. That game is over. I keep on telling people. So, I just think with resources, limited resources, yada, yada, labor, services, I don't believe we're going back to that kind of deflationary. And I'm a little bit skeptical on the AI. I don't know if you guys, so I also, and I'll make a shout out to Steve Eisman, and he's got a YouTube channel, and from the, Steve is from The Big Short, right? One of the main characters. And I believe he's a fairly smart guy. I've never met him in person, but I followed him. I really liked The Big Short in the way that they depict his character, but also just, in interviews that I've seen him throughout the years, going back to like 08 recession, which is 20 some years ago. His interviews, I just thought he was always smart. He had just recently a guest on, and they talked about the AI, and this guy's been dealing with AI since like the 1980s. Think tanks. I don't know. It's a great. I encourage everybody to kind of go to Steve's YouTube page. He's got a podcast or whatever, and listen to that. And that to me resonated, and I want to say it made sense. Whether it's true or not, I don't know. But I'm not fully committed into the AI and the productivity and the deflationary effects that it's going to really produce. So again, going back to inflation. So anyways, squirrel got off track again. Let's get into the charts. We've talked about this range right here for quite some time, and I'm going to keep talking about this because, again, I've talked about where I see price at some point getting stuck in the mud in and around here. So, again, that 69.70 all the way down to 68.70, right? And we get stuck in the mud in here, which will make for, I would probably say, again, on a spectrum of is trading easy all the way to is trading hard, right? If we get stuck in here as we're, building out this profile, and this really gets, this gets built out pretty large, and then this is the middle, and then we get, and let me see if I can show you guys where, oops, wrong way. So right now, the developing point of control on my chart is 67.29, right? And this gets shifted, it shifts up into this area. Now for that to shift, we're going to need to spend, you know, time and volume, which is basically price, in and around here, right? That 69.20. Let's actually, what is it exactly? Let's give you guys an exact 69.29 3/4. So again, kind of going into that, I still believe that's where, you know, it's something that we're gonna have to, going into this year, keep an eye on. So as price is right at that level, right, this is where gap rules are in play. And again, as we move down, right, day trade type 12 as well as the day trade type 15 as a retest of that low. And again, does that then, right, we kind of get back up and then we get stuck in here, right? That's the, right, how do I always say that? Like, do you understand the assignment? Like, that's the assignment, is as price, right, does this become the catalyst that then makes the move lower? And then this really kind of goes into price selling off, more than likely all the way into the Fed FOMC. And then we'll have to, you know, kind of take a look at that, because then that could be the catalyst that, you know, whatever Powell says and takes it back up. You know, I'm always thinking of like, price kind of moves in a certain kind of boring range way, and then you get these catalysts. So obviously this weekend with Trump talking about tariffs, you know, all we have to do is go back to last February and, you know, February to April of last year. And again, we all know how that played out when, you know, tariffs get kicked around like they do. So I'm watching that. I'm watching this today. But these are where the levels kind of come from in today's trading. So, right? So do we capture above that 68.98, right? This is an LVN right here, right? So you can see it plainly on the chart. So as we come in, do we get a two-legged pullback into here that holds, and then we roll back over for a meaningful price, right? Now, that's the initial. So as price comes in, I'll be watching that. Now, or does it kind of get a little bit higher and we get into this LVN? That's where that next level comes into play, LVN. And then that becomes the rollover point. This is definitely, if it gets, right, we have this level. And again, this is where it gets really tricky as a trader, because if we get above the 69 or 68.98 and we get above, this could easily, you know, depends on how that, the tempo, this could easily just kind of come back down and then kind of come back up, right? And then we got, right, the gap to kind of fill. That definitely is something to watch for. That's why I say, like, this kind of, this in here, in that, like I said, 69.05 is kind of, you know, you really have to be on point and watch that price action closely, because this is where, in between here is where it can get tricky. But first point is, one, they got to clear this LVN, and then, right, more thinking this, you know, we got this down here. So again, we got this distribution here. Where do we get sucked into down in this area? That's right. That's kind of the way that this is playing out. I feel like that's the play. And then I'll be watching for, right, I'm bearish going into today. But if price does get above that 68.98, I am going to kind of move to a little bit more neutral stance, and I'll be really dialing it in and watching that 69.05 area and how price reacts to that. With that said, nothing else on the charts, nothing else in the profiles. We already know we're opening up in a gap. I'm going to go, I guess let's just go to the trigger chart. And then again, we'll kind of talk about a couple stocks or tickers that I'm really interested in again. So when we zoom in, right on the 5 minute, right, this is really what I'm watching for, is just on that open. And again, do we kind of get lift? You know, you kind of have this ignition bar right here that's tricky, even though this is a 5 minute chart. So I'm not putting a lot of weight. I really put a lot of weight more on ignition bars on hourly and daily charts. But, you know, the definition of an ignition bar is this bar right here. So I'm watching that. And again, as a trade opportunity, I'm watching day trade, right? So one, I'm watching gap rules. Number one, as that is playing off and the IB is, you know, forming, right? Initial balance. I'm watching for this reaction high, and do sellers, you know, kind of initiate in this area and then, right, pull price down. Now, as we, if we do and we get down into these lows, this is what I'll be watching for as time goes on. And again, you know, you draw these lines and it's like, oh yeah, you know, this thing doesn't happen over 10 minutes of trading. You know, more than likely this will take a good noon, 1 o'clock, and we'll have to see how this plays out. But if at any time, if tempo isn't like just off the open and then straight down, right? So if tempo just isn't like sell everything, sell your grandma, you know, throw the kitchen sink out the window, and it's a day trade type 8, which is rip your face off trade, and we don't get that, which I'm not seeing that yet, because again, that overnight skew isn't super bearish. So I'm not seeing that commitment yet, or in this morning. So I'm not looking at day trade setup type 8. I don't see that trade as that's the trade to be correctly portrayed in this morning. I'm more or less looking at 12 and 15. 12 watching this reaction, and then 15 when we get down into these lows. Do I stay with 12, or I'm watching very carefully if and when, not when, but more if 15 sets up, and we have to kind of trade and flip a little bit of flip where I was, you know, short coming down in here, you know, basically take the shorts off and then, you know, look at flipping long as, right, sellers can't, you know, really push this in, and we get sucked back up into, right, that 69.24 and a quarter. Now, if price just rips up here, right, into 69.24, that's, again, you know, then I'm watching for, more than likely, you know, again, I'm going to probably, more than likely, as long as the price action tells me, but I'm, you know, would be under the impression to possibly take that short. But then again, kind of keeping it nimble and watching, you know, that 69.05 level, and then watching, do buyers, right, buyers push up, and then they hold the pullback. Again, as I always talk about, whenever there's a move, there's a retracement, and then you got to hold that pullback. Whether you're selling down, right, they're pushing down, right? The sellers have to hold the pullback. You got to hold that pullback and then advance to a new low. So again, if buyers come in and sweep this thing and take it back up, and we get into this area or that level, right, I'm going to be watching, do they hold the pullback, and then, right, we kind of take it up. That, you know, that would be impressive by one. But then two, right, I'm not going to, you know, I'm going to be flexible enough to understand what's going on. Yeah, but otherwise it's a, right, typical pullback, two-legged pullback, and then, right, kind of a more selling, right, where we get and push through this low. But again, down in here, this is going to be very careful and watch for day trade type 15. Anyways, hopefully I beat that horse to death enough. Everybody understood that. And now let's go into, I don't think we have to, that's the trade. So, you know, watch tempo, right? It is kind of bearish by price. Watch to see if these sellers really kind of take traction. Don't, if any advice I could give you today is hopefully patience in, don't chase and watch how price forms that first IB, right? That first initial balance, and then trade from there as a working, right? As the market then gives you some signal, right? You don't have to jump in. This isn't a day where, we got to be in the trade, before the open. So we got 9 o'clock on the clock. Let's look at a couple, charts to the dashboard. I'm going to leave this up here as the weekly day chart. And I want to go first. I'm going to do, let's look at what Henry was talking about. Let's look at silver. Right? Silver again, pushing close to 100. Like, I'm not chasing this. This does look parabolic though. If it does come down, right, this would be the thing is, again, we talk about trends, and I've talked about these moving averages, where the moving average tells you the trend, right? And it, the slope though of this 20 period moving average and where we are on the MACD. And why do I have, what is this? That must be from some old analysis. Anyways, that's the only thing that I get worried about. This price action though, I mean, right here, you push up, you break out, pull back, and then push, consolidate in a range, push up into a range, really push, and then again, you hold the pullback, buy your step back in. This is classic technical analysis 101 of a good trending chart, right? Again, you're making these pullbacks, right, in a trend. And again, we pull up, push, pull back, and then, right, you're making a new high. So again, but when you're looking at, if I just show you this picture, where are we in the trend, right? You should have bought a couple of days ago, in this low, right? So now you're sitting at price here. Is this a good place to buy? You know what I mean? Personally, I don't think so. Because again, you're going to get the pullback and then another ramp. I'd rather wait for price to break out, pull back, and then buy the pullback. So where we are in the sequence, when you look at that, is, we've busted out, we've pulled back, and now we're breaking out again. And I just don't feel like chasing, right? So this would have to pull back and to get something juicy where I can risk reward, where I can risk a dollar or two and then right for another move up. And so, just kind of FYI, this chart looks good. There's nothing in real time as we're assessing silver. There's nothing on this chart that says sell this, sell it. Nothing that says sell price. So as a seller, there's nothing on here that says, hey, initiate a sell contract. At the same token, as a buyer, there's nothing on this chart that says, hey, scream, chase me, and because I'm going to 150 right now. This, if anything, this shows you how, right, price pushes, pulls back, price pushes, pulls back, price pushes, pulls back, price pushes, pulls back, right? And so you can see these pullbacks. It's not like it's just going every day up, up, and up. You're getting these pullbacks. And so that's how, in the sequence, I would just kind of phrase this. And again, if we look at gold, very similar situation, right? Where, right, this, nothing says this thing is broken. Trend is still up. You know what I mean? We're still holding the 20 period moving average on a day chart. And again, break out, pull back, break out, consolidate, break out, pull back. Look at that pullback. right? Pulls back, breaks out, and then again, they come back and pull back, and now we're breaking out, and we just broke out. We got to pull back, and then we're just breaking out. You know what I mean? Wait for the pullback. Now, this could go a couple days. Wait for a pullback, and then, you can, again, assess a really good risk to reward trade. When you're chasing, and again, I'm going to get a trader that's like, oh, I chase, I break out. I buy new highs, constantly buying new highs, and it works out. And I'm like, that's, when you back test these rules, they're just over time, you do that, and you're going to get yourself caught into a bad habit, and you're just going to get wrecked. It's, where do you put your stop? You're buying all-time high. You're buying at the high. So you have to put your stop way down at inflection low. And then where's your target? You know what I mean? You can't even quantify where first target is. So that, again, just, if I could hopefully teach somebody new, or, or somebody stubborn or old, even an older trader, like that would be the habit I would just kind of get yourself into. Is great. You see an instrument taken off, an equity taken off, a derivative taken off. Great. Wait for the pullback. Don't get chase happy. That sets you up for just, over time as a trader in this game, sets up as a bad habit. But again, chart does look good. I definitely don't think you should short it neither. All right, so I'm going to talk about DBA because I really like this chart. And again, this kind of goes back to my level of thinking. So I do like that we're sitting on this level right here on a weekly chart, right? And I'm sorry, I'm just looking at anybody put anything in the chat. So if there was any other stock. So day trade type 14, I do like this setting up as a day trade type 14. And I like this weekly chart. And again, we're RSI at 40 on a weekly only. So don't take this trade and like, oh, Jason said RSI 40 on a day chart and an hourly chart. That's not how this setup works. That's not how it's back test. That's not how the back test worked. The back test worked on a weekly chart, and on this 40, this is usually high probability trade that's the low, and then this starts taking off on relative strength, and right first target is targeting 60. And again, something like this, right, where you're targeting that low, and this is on price, but you're using this as the gauge, right, from 40 to 60 on relative strength on this indicator. And again, this is a banded oscillator, so you need to understand how banded oscillators work. So with that said, let's get a little bit granular. We're going to maximize this, right? So again, today setting up, we closed last week at 25.60. We're trading 25.20, 25.67 in the spread. Now, as we open up and watch this, the inflection low, the low is 25.40. So again, you have a fairly decent risk to reward. And this isn't like a day trade. This is kind of a setup. I want to see how this 2026 plays out. And again, this just goes into my theme, the theme that I believe this year is going to present really good opportunities where, right, this is the agricultural ETF, and, on a good, start position, I'm doing a starter position, probing this area, and then watching as this sets up. We got this inflection high. I'm looking at, right, risk to reward somewhere in here. And then I'm targeting, right, first target would be targeting this. We got to get through $26. And then once we get through $26, as time goes on into the future, right, I'm really targeting, this would be like the first target would be here, letting the runner go, taking some price off. And again, kind of like I talk about the sequence of higher highs and higher lows. So as this breaks out, right, getting a push, holding a pullback, taking some off, putting some back on, another move higher, right, taking some off, putting some back on, and again, kind of coming back up into 28. And again, if we take that back to that longer time frame, right, this would be how I'd want to see this thing play out. Is, does this end up forming just a range up here for a few years, right? And we're just kind of in this range where agricultural just kind of, right, and again, these are commodities, so has more bias to range trading than momentum trading. And again, do we just kind of, right, is this just sits into a range? And that's fine, right? You're buying at the lows, you sell at the highs, and then, right, if it comes back down here in the future, 27, 28, right, then we buy at the lows, sell at the highs. And this could just be where agricultural trades out in the range. I'm getting way ahead of myself, but just for the 2026, kind of thinking, this year, I'm really watching DBA and then watching it as over time. Does this just consolidate up here for a long time? When I say long time, like multi-year, if anything, it's a decent, say trade to put in the legacy portfolio as a rotation, and then, right, assessing the economy, macro dynamics, and does this just kind of range, or do we get a push up, hold a pullback, right, and then another move in commodities? Again, this is not a day trade, so I'm giving you like a little bit of a longer term trade setup. So I do like DBA, and I do like that right in the now. I like this setup, in and around here, for a decent trade. And again, with today selling off with a big gap down, this could just be a decent opportunity to buy some stocks, go through, and I'm going to go through my portfolio and just see where everything is sitting at. And is this a juicy buy the pullback in a longer term kind of perspective? I know it's just one day don't make a trend. And then as I'm sharpening my pencil with the day trade setups, day trading, I'll be a little bit able to gauge, like, hey, maybe tomorrow, maybe Wednesday, because maybe there's going to be some more selling than just today. And today's just one day, but we get a little bit of continuation into Wednesday and Thursday of some selling, then, being patient, waiting for a little bit of the end of a move before I kind of pick these things. So I'm just giving you guys my real time, assessment. Again, that's why I like day trading. You get to really sharpen your pencil skills, know when, or have a good idea of when is a good time to buy or to pick up chips in your longer term portfolio assessment, and you're not missing opportunities. So with that said, gas almost $4. Oh yeah, I already read that. Thanks, Henry. So with that said, that's about all to today, unless somebody's really quick, throw something in the chat. But if you're in Myrtle Beach and you're looking to day trade in a collaborative office environment alongside alongside fellow professionals, I invite you to come take a look at our office. Right, we are at 100 Sutter Drive, Suite 101 in Myrtle Beach. The office number is down here. This is an email. If you're specifically thinking about trading, this is the trading website. If you want to see some resources and go from there, obviously you can always call me. I'm an open book. I've been, sometimes proved a little bit too brutally honest on social media in the past, especially in my younger days. But I always, I'm a real person. I think other people are real people, and I hate it when bullshit people hide behind avatars and whatever, especially when you're, out there in the world giving your ideas and talking. There's a few people that I know, and it's one thing if you're just, it's whatever. I don't know. I just think, I wish sometimes social media just be like, hey, you gotta put your real face and your real name out there, and I'd be surprised at how much talking shit happens in the world. Whereas when you get to hide behind avatars. Anyways, that's a rant from past years when I was younger. So gave that up. I don't care. Everybody can do whatever they want, but I'm a real person. I put myself out there openly. This is where you can find me, and go from there. You kill what you eat, or you eat what you kill. Anyways, as always, learn, trade, profit, and I'll see you guys tomorrow morning. Have a good day trading, guys. Take it easy.